Good morning, everyone. Welcome back to our stock market weekly brief. And we have a ton to talk about this week with all the data coming in, as well as markets making all-time highs. And are we going to continue to make new highs next week? And with the FOMC rate cuts coming up on Wednesday, let's take a look at all the data, as well as the technical analysis of the QQQ, as well as S&P 500. And we'll be looking at the 7 mega cap tech stocks: Meta, Tesla, Amazon, Google, Microsoft, Apple, and Nvidia. So before we get into the technical analysis, let's take a look at the data. So right now, fear and greed index is sitting right smack dab at 50. So that doesn't really give us much of an edge, especially if it's right in the middle. And so let's move on to AI sentiment data. So sentiment data is went a little bit lower compared to last week, 48. I was saying we got to be a little bit cautious if this 48 starts to go into the 50s if this week, but it looks like it pulled back a little bit, and participants were a little bit more bearish. Actually, that probably made people getting squeezed out of the queues and probably made new all-time highs because of that. And so we'll see how next week might bring us if this continued to shift back to the bullish side at the moment. And earnings. Last week earnings, we talked about AVGO being probably the biggest mover, and this week not that much other than Micron MU might move the market, as well as a semiconductor stock. So if they do well, the whole semiconductor sector might move with it, just like AVGO did overall. Although it's not as big as AVGO, but it was still slightly move if they forecast really good demands. And FedEx might give us a little bit more clues on the economy, and the only bigger one here would be Nike left for me. All right, let's take a look at. So next week, Wednesday, we have a rate cut. Now pricing in 96% for a 0.25% cut. And you can see it probably here. We're going to get it 0.25 cut next week. And for now, in January, it's a rate hold at the moment, but this can all shift, within a month. But we're pretty sure it's going to get a cut on Wednesday. And jam-pack economic data. We have PMI coming up on Monday, which is a manufacturing data as well. And a little bit of bond auction, 20-year bond auction, and some core retail sales here. That will move the market. And Wednesday, of course, FOMC rate cut decision. Biggest one on Wednesday. And Thursday, we have core PCE, which is inflation data, as well as jobless claims. These will move the market. And then this one's initial jobless claim as well. We'll have to see. So far, job numbers always been coming in decent. Nothing too crazy. Economy still holding well overall, and we get a little bit of another one on core PC on Friday. But so far, nothing too alarming in terms of the economic data for now. But we'll have to keep eye watch at it. Maybe one day, one of those months, stuff will roll over. But for now, everything's still intact. All right, let's take a look at the Qs. So Qs, really not that much to really look at, other than we do have a rising wedge resistance. No, that's not what I want. So pretty much like this. And the support is pretty much like, so just a mini one. So there's nothing too alarming, right? If this breaks, right, it's not that big of a deal. Even if this breaks bare, and we could come all the way down here and it would still be a healthy chart. So, but of course, this is where you don't want to leverage up, right? If you're leveraging up and it breaks bare, right, then you're going to be probably underwater quite a bit. If you leverage up and it goes down 3%, right? Even if it goes down to this red line, where it's the previous rising wedge resistance, the big one, if you zoom out to the weekly, it's just a weekly consolidation. No big deal. Even if we come back all the way down to like the 500, 506, right? It was still a healthy consolidation. Go up, weekly higher low set, weekly higher high, uptrend is intact. Even if we come back all the way here, as long as the weekly support holds, really no signs of red flags at the moment. Especially if we back test the prior all-time high, as we come down all the way here and the holds there, and it continues, even when we go sideways or head higher, right? So right now, market has no red flags at the moment, but we just be a little bit cautious, right? If you don't want to leveraging up too much here, as we have a rising wedge. You can see characteristic of a rising wedge is pretty much just higher highs lacking follow through. So we made a new high, lack follow through, a new high, slightly lack follow through. A new high, slightly, lacking follow through. So that's just pretty much the characteristics of rising wedge at the moment. And we do have a little bit more clues on the SPY. See, we're just chopping here. It smells like a triple top, you can say. That's right. Last 2 days, a double top, and we're not getting over all-time highs at the moment. Kind of like a triple top here and then the double top here. It's very clear resistance on SPY while the Qs are making new highs. We're getting that rotation. As long as the market continues to rotate, right? Let's say the Qs pull back here, right? And SPY holds up very well and then, goes sideways or potentially rotate. It goes a little bit higher where they get the XLF, financial sector, healthcare sector, all rotate back to the SPY. Then there's no red flags in the market as long as they're rotating between tech and SPY and vice versa, back and forth. That's what we're seeing now. Well, that's what we've been seeing for the past year overall. It's still going, so nothing to really be alarmed about. The only thing we want to be alarmed about if you see this breaks, right? The tech stock breaks, right? You see XLK dropping, which is the tech sector, and QQQ rolling over, and then you see everything else rolling over, right? The financial sector, the healthcare sector, all the major sectors, XLY, everything you think of roll over as well at the same time. And that's a little bit of a red flag, right? That means it's distribution. People are selling everything at the moment. But as long as you get that rotation, right? Some people selling tech, now they're buying other sectors, and there's no red flags. So just keep an eye on watch if all the major sectors drop to the lows. When we do get maybe like a bear break out of here, be a little bit cautious on that then. But for now, I wouldn't be throwing my money in here either at the moment or anything like this. But so just be cautious overall, and especially at these levels. We have a lot of room on the weekly chart to pull back, right? Even if we come back all the way to the 12 EMA on the weekly chart, around 588 is still a healthy pullback, right? So yeah, just be a little bit cautious. Even we might get a pullback sometime soon, and everything will still be healthy chart. So healthy consolidation happens all the time. All right, let's look at the meta. So we're looking at this megaphone here overall, and looks like it's still kind of, it's just a little bit of rejection here. These lines aren't perfect, especially the diagonal ones I talk about. We don't trade off of them. It's just more visual guide overall. And this one was more key for me, where when we broke above, right? We held here 4 times pretty much perfectly to the line and broke above right here. You can see that was volume just come in right when we break above. And then we break up this all-time high, and then we got more volume. So right now it's still like pretty much sitting like a weekly bull flag, but all-time high. So no red flags at the moment. But even if we come back all the way down to test this prior all-time high 600 level, it's still a healthy chart, right? Overall, at the moment, I'll say still daily full bull control. At the moment, we're just making daily higher lows. Last one set is right here at this 606.17. So as long as that holds, daily uptrend is intact. So the first step is for bears to break that level, the 606. If we break 606, we're probably going to go to 600 to test the 600 level. So those are the 2 levels I'm looking at when it breaks bear. For bulls, just make a new higher high, break above this. The only resistance we have, it's pretty much this prior little structure right here, the past 2 days. That's about it, because we're sitting at all-time highs. And even if you just want to, adjust this a little bit here, something like that. Yeah, let's get over that, close the candle above it, and we're probably breaking above it anyways, but it's not that significant for me. It is kind of a longer term. Just this little structure here, 1, 2, 3, 4. But yeah, we'll see. Price action is more important than definitely this trend line. So we'll just keep an eye on the price action as long as daily uptrend is intact. No signs of red flags. And Tesla here. So really nothing you can do on TA. We just, close all-time highs and with pretty much at the high of day. So yeah, mean, if you really want to do a TA, it would be something like maybe we have. Let's see if we have a rising wedge on the short time frame. Nope, not even that. Let's see, maybe like this. Yeah, maybe something like this. Sorry, there's it's really windy here today. So you can hear all that wind. Yeah, so something like this maybe, right? 2 touches here, another one here. This is 3, 4. So maybe if we come up here, 5, right? If that's we gap up, then people are probably going to take the profit if we gap up 3%, especially if we're pretty overbought on every time frame. So if we gap up 3.5%, I would be cautious. I'll probably be taking. If I was in a position and I see this gap up 3% after such a significant run, I would take profit and then look to reload. But we don't have that yet. We don't want to be guessing that's gonna be an all-time high. It's more a channel. It's not really a rising wedge. Right? We're just kind of grinding this channel up at the moment. Yeah, that's the channel you look at overall, but no resistance because we are just sitting all-time highs. Even if we pull back all the way back to prior all-time high at 400, come back to back test 400 is still a healthy chart. Then we may bull flag here, chop around, decide whatever the bulls wants to do. Best case scenario for bulls is you consolidate at the high of the range, form a bull flag. At the moment, no consolidation yet. No signs of any kind of pullback at the moment. We'll see how that channel plays out until the channel breaks down or breaks above. We'll just continue to probably trade in this channel for the short term. Let's take a look at Amazon. Amazon, no resistance either, other than just grinding slightly below this black line, which is the rising wedge resistance. Here, 1, 2, 3, 4. Just kind of playing around with it. 5 around here. Yeah, that's about it. We're sitting same thing with all these mega caps, right? Sitting all-time highs, and with just a kind of like a rising wedge resistance that may reject from. That's about it. Everything daily uptrend intact, weekly uptrend intact. Last higher low pivot is set right there at 224. So the bears cannot break this 224. Daily uptrend's gonna be intact. If we do break 224, then I'm probably looking closer to. Honestly, I wouldn't even be surprised if we come back and test 216, this prior all-time high. If we come back all the way here, chart is still gonna be healthy. No signs of red flags. So yeah, be a little bit cautious, right? Even if all these mega cap pull back 3%, which would probably drop QQ quite a bit, maybe like a 2% drop. Everything on the chart for these mega cap tech stocks are still healthy overall, even with that big pullback. So just be cautious into next week, where even with pullbacks, it's not. We might have some red days on the Qs. All right, let's look at Google here. Also all-time highs. So, and no signs of red flags. Even though we got the 2-day pullback, which kind of makes sense. Right, we ran 20%. So 2-day pullback, nothing. So we broke it. We broke bull out of this EQ that we've been looking at together for months. Big pull up, big one down, tiny range keeps tightening up, tight, super tight, and then you can see this gap. This gap is where it broke bull, and then it just goes. And especially when something tightens up for many months, and it breaks bull, then it will have a big move. Sorry, someone just called me. Give me a second. All right. So yeah. So as long as we back test this structure, it doesn't mean we tip this structure and then we bounce. It could come down to where the more volume. You can see this volume profile. So there's a little bit more volume down here. So even if it comes down to this 186 level, pulls back then bounces, it's still a healthy bull flag, honestly. So we'll just see how it consolidates here. The only thing that would be a red flag is if we go like this, right? And then come all the way down here, give back all these gains. That's like a blow off top. But other than that, come down to here to 108, form just consolidate here, maybe something like that, a bull flag. and no signs of red flags. Even if we come back and back test this breakout range, so we come out all the 181, this still be okay. Ideally, you don't want to see that, especially this kind of move, and then we come back all the way. But it'll still be okay overall. It'll be a 50% retracement, and then we bounce from here. That would still be fine. Maybe consolidate sideways over here overall, but nothing too red flag at the moment for Google. All right, let's take a look at Apple. And no red flags, honestly. This guy just a beast at the moment. 14%. So after it held its support, its rising wedge support multiple times, you can see or it tests quite a bit over here, actually, 4 times here. And then it's kind of like right above this rising wedge resistance. This one's a short-term one. I'm not sure why I drew that one. Let's see. Forgot. Whatever. Delete it. But we are above it. You can see we kind of broke above it, and it's kind of just acting as support now. But see, bounce, 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 bounce. So, and it's forming like a tiny range here on the short-term time frame. So we'll see how this short-term timer breaks, right? If it breaks bull, then market continues to go up. If it breaks bear, then we're back below that longer-term rising wedge as well at the moment. Which is this one right here, right? This green one right here. And we're above it right at the moment, and it's now acting as support, pretty much backtesting. So we'll see. Yeah, this one goes all the way back here. It's a longer term one. So yeah, 1, 2, 3, 4, 5, and we'll see. So red flag would be we break back down here and then come back down here, bounce, shallow bounce, and then crack through it. This would be a red flag for me overall, but this would take probably months to shape up. So we'll see one day at a time, right? Once we get those bearish signals, we'll see it coming. It won't be, what do you call it? It won't surprise any of us. It's not going to go drop in a straight line down. Yeah, overall, let's take a look at Nvidia. So Nvidia is the weakest so far, I would say, for all the mega cap tech stocks at the moment. And since we rejected from this green line over here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, it's kind of just forming like a really ugly head and shoulders look overall, but you guys get the idea. So pretty much must hold 132 right here, right? Very clear support. That's been holding. So if this cracks down 103, which is, guess what? This structure's top. That's where it's been holding. Will likely come down to test this 125 for me. If we crack down 138, 132, we'll come down to 136. And if we did bounce from 132, I'm looking back to this green line again, closer to 140 and resistance. So it's probably going to continue to tighten up if it bounces from there. But if it doesn't bounces from there and we crack through it, then we're probably coming down here. And 121 if it breaks 124. So yeah, so we'll see how Nvidia plays out. So far, it's been the weakest of all the mega cap techs as of late, the 2 weeks. So we'll have to see if it, plays catch up or it breaks down even more. But yeah, for now, and semiconductors are really, the sector is really weak. So we'll have to see how it plays out. But overall, market is, we're getting a little bit frothy here, and the mega cap text has a lot of room to pull back. Even if it pulls back a lot, it's still a healthy chart. So I wouldn't even be surprised if the Q's pulled back because it will still be healthy. Just those healthy consolidation moves. It might seem really big on the day, right? When you pull back 2%, it might seem like a big fall. But overall, even if we pull back 2%, it's still super healthy. Try it. And yeah, that's all I got for you guys. Feel free to like, share, and subscribe, guys. Learn anything made it this far, as well as feel free to support the channel on YouTube, as well as if you guys are looking for mentorships for one-on-ones to how to better trade your techno analysis, as well as how to trade for futures, or how to get better entries and exits, or manage your emotions. Check out the Patreon link for one-on-one, or go to the free link for 15-minute free call, and we can talk about it. And have a great rest of you guys' weekend. I'll do the commodities update tomorrow.